Paul Bloxham. He's the chief economist at HSBC Australia. Is this a pleasing result then, Paul?
It's a pleasing result for us. We had in mind it would be a 1.3 and we got a 1.2, so it was largely in line with what we had expected for the quarter. The other part of the story is not just the headline GDP number, but in fact the components. If you look across the components, we saw continued strength in domestic demand. So really what we saw was the economy got a big disturbance in the first quarter from the Queensland floods, but that was largely isolated to the export story. Strong domestic demand was a feature of what we saw today, and that's been a key part of the story we've had in mind.
Does that mean that some of the worries about the impact of the interest rate tightening cycle and how that's affecting people's pocketbooks perhaps were overblown?
Well, I think that's certainly the case. What we're hearing, or what we have heard a lot of in recent months, is the story that retail sales is particularly weak. And indeed, the accounts today don't necessarily disprove that. Retail sales have been relatively weak. It's just that households haven't been consuming at retail stores. They've been travelling a lot, and they've been spending a lot more on education and health services and those sorts of things. Households do seem to be in a pretty good position, according to the data today.
Now, one of the things that the Reserve Bank of Australia said when it decided to hold rates this week was it again cited what's going on with the rest of the world. How much does the slowdown that we're seeing in advanced economies outside of Australia impact the psyche there, the consumer psyche?
Look, it's a key challenge for Australia because although we are very much more tied now in terms of our economy into the Asia story, where we've obviously got a mining investment boom, very high commodity prices, and it's being driven by what's going on in China, which remains relatively strong, it's still the case that we're an open economy with financial markets that get affected a lot by what's going on in Europe and what's going on in the United States. In addition to that, we also get a lot of the news, of course. The media coverage here is a lot more focused on the US and Europe than it is on the Asian nations. So to some degree we do get a direct feed for what's going on in the rest of the Western world, even though our economy is more driven by Asia.
Are you concerned about China at the moment? Do you see a continued slowdown, a sharper slowdown there?
No, our view is that China is actually getting what it hoped for, which is a soft landing. Our expectation is that growth will slow this year to somewhere between 8.5% and 9%, and we'll get a similar sort of growth rate next year. They have an enormous amount of fixed asset investment that is still playing out over the next couple of years, and we expect that to continue to support both the Chinese economy and also to some degree to support commodity prices, which is obviously a key feature of the outlook for Australia.
What's the big concern going forward? There's concerns about overall productivity in the Australian economy. What are we going to be looking at in the next few months here?
Look, I think productivity has been a concern for quite some time in Australia. We've seen a genuine slowdown in the capacity of the Australian economy to be able to grow without inflation. We have seen that happen over a number of years. Labour productivity looks as though it's running at about 0.5% a year over the past 5 years, down from around about 2% per year over the previous 5 years. It's not a problem that you can fix particularly quickly, but it's certainly something that should be seriously on the agenda for the government.
Thanks so much. Paul Bloxham, their chief economist at HSBC Australia.